Hi there. I'm Gordon Peters, co-founder and CEO of Boost Capital. Boost is a white-labeled tech provider that allows bank partners to onboard loans through smartphones in 5 to 10 minutes without an app download. We've been thinking deeply about AI and machine learning and have used it in partnership with banks across Southeast Asia. And we wanted to talk today about what's been working and not working with real bank partners in emerging markets. Today's panel is called AI for Financial Inclusion. It's not just about ChatGPT. Joining me today are some fantastic panelists. Baran, the CEO of AMK Microfinance in Cambodia. Manu, the CEO of Wing in Cambodia. Karen, head of MSMEs with BDO Network Bank in the Philippines. Shubha, the VP of Social Impact Asia Pacific, MasterCard Center for Inclusive Growth in Singapore. And last but not least, Roma with Credit and Risk Analytics, Axion in India. We're seeing banks and financial institutions start to integrate AI, ML, and natural language processing in various ways. Lots of people think it's about ChatGPT or Google Bard, but it really is across the board. Examples are including customer onboarding in ways that increases access to financial services by opening new channels of communication, data analysis and machine learning to drive innovations in financial product development or credit underwriting, integrating financial education options for applicants to improve their qualifications, and customer service. All these implementations open up financial services to previously underserved populations. But we also see barriers to banks that they've got to overcome to integrate these capabilities. One, starting a new channel requires focused marketing strategies and approaches. Two, dispersed data repositories or poor data quality. Three, less popular languages don't have as many AI options. And fourth, any implementation of a new project requires behavior change. We've got a great panel of practitioners today, and we're excited to hear what has and has not been working for them. Thanks for tuning in. First question, how did your organization decide when it comes to AI in operations, either in your organization or groups that you support? How do you think about if you start the same way, if you had to start today, what you've done in the past, would you do the same thing or would you do it differently? And then where did you start and how did that come about?
We had been working with multiple fintech company. For in case of Boost Capital, we're working on AI loan applications. We're working with other local company for supply chain financings application. We're working with other for scoring, and these are joint collaboration outsourcings to a fintech companies or to other people to do it, right? And we actually sourcing those technologies to be able to reach most of our customer. So yeah, if you were ask me again, say, will we do it again? I think the answer is yes. I think there's no regret to actually try these such things. And I think, we as a company, we also very open to try new things, so long it within our risk control. So the board give us the risk appetite where we can expose and learn and explore new things. So I think as long as within our risk appetite and within the low budgets that we can have, I think we are quite free to try.
So, I worked with Axion for a long time, and we supported partners in, I would say, data analytics and assessment. Axion has been a pioneer in that space in, from the very beginning, wanting to be data-driven in our assessments, wanting to have access to information, and not only information that is available easily, but information that needs to be looked at from a point of inclusion that might not be available easily. Banks usually looking for things that are standardized and easy to access and on which assessments can be based. And Axion has always, I think, been a pioneer in having to manage clients where data was not being collected in traditional forms, perhaps even though they were manual, and work with a lot of clients doing that. So I think a natural progression towards using a lot of database analytics in terms of client segmentation and assessment, rather than I would not like to use the word scoring, but more segmentation and understanding clients and then having appropriate assessments based on that is something that we've always done. And a natural progression towards that was using newer technologies when we had access to data and historic data, especially where payment behaviors, etc., were concerned, to look at new technologies like ML, where ML could support us in doing that. And I think we've been doing that for a while with clients. So that's something I think that we've always been interested in, focused on, and contributed to in a large way with a lot of the institutions that we work with. What we haven't, I think, experienced, or at least me personally, I would not speak for Axion because I'm sure there are other people that might have, but what we haven't experienced too much in terms of implementation in the field is that client interaction using digital channels. And I think that is still in its nascent stages. I think, I mean, you guys have started, I don't know how, when did you say you were founded? So in the last 3-4 years, yes, we are seeing all this access to the digital channels because ecosystems in a lot of geographies are now supporting, customers having the mobile access, having WhatsApp and things like that. But I don't think we've seen a strong use case yet of AI being used super effectively in reaching out to those clients. One of the things I would say is that where we have seen it, one of the challenges I see is that there is, especially when it comes to inclusion, there is a gap between clients being able to consume that, like, having access to digital versus having the education and the capabilities to use that channel effectively to get what they want, even if the institution has the best intentions of providing them the product or service that they're looking for, is a little bit of a gap.
So then we became a commercial bank and we positioned ourselves as a bank for every Cambodian. Now, when you position yourself as a bank for every Cambodian, you have to be looking for ways, economic, cost-effective ways to reach out to every Cambodian in the country. Now, there is a reason why every other bank is not the bank for every Cambodian, because of cost of operations and the brick and mortar structure through which they work and the credit officer model, etc., are not viable when you have to go into the interiors where the return on that investment is not justifying that cost. So it had to be technology that had to drive a bank for every Cambodian forward. So that's when we seriously started investing in people, software, and knowledge in building, in using AI and machine learning to into the banking operations that we had. So today we have about roughly 1/5 of every loan that is being dispersed through Wing Bank. And about 13 to 14% of the entire adult population in Cambodia is now pre-scored for a loan from the Wing Bank side.
So far, we haven't had the time to really put in AI. That said, when we've been talking to external people like you, where, hey, there's actually solutions out there that could be applied to our market. I was very curious about this onboarding thing because it addresses the front end where people have limitations, right? When a lot of the time when you onboard client, it takes a long time. They go back to the client multiple times to collect all the requirements, right? And having a digital platform in place with AI can do that for you on the side 24/7, right? Not that it replaces entirely people, but at least because a person cannot be there 24/7, right? And truly, these business owners are quite busy. They wouldn't really have the time to really, organize their documents. It's unorganized, right? So I guess that's where we are starting in our journey, just learning what's out there, what we can build into our process, because there's a lot of efficiencies that can be gained.
The second question that we had is what are the biggest successes that you've seen in work with AI ML for financial inclusion?
I'll tell you a little bit, some data points around the success, but also, looking forward, how we're thinking about the use cases. So first and foremost, safety, security, and protection and privacy, right? Like things that we think are fundamental human rights. So using it to build a strong governance process around that. And by doing that, what we've done is really just, we employ hundreds of data scientists and AI technologists. And what they've been doing consistently over time is building up their capacity to say, for example, just this year, if I bring it very close to this moment in time, using one of our platforms, the Safety Net platform, we've declined 162 million attempted fraud transactions. before they reached issuing banks. So that's pretty significant, right? And therefore, by doing that, we've just prevented any disruption either to that banking system, the issuer, or the end consumer. So that's sort of like a very real example of a recent success that we ourselves have seen. We have another very cool product called Dynamic Yield, again uses AI to deliver just in the past year, 371 billion impressions of personalized information across 400 brands. So there it's about customer service. First, it's about customer safety and security and the whole banking system and how we can support that. And then we move one level forward to sort of say, okay, how do we improve the experience? And there, just to get to that level, because it's so much data, we wouldn't have thought maybe 15 years ago that we could customize to that extent and serve customers, right? So today we're able to do that. We're also like at a deeper level, and this can really support governance at the national level. We have AI models that are beginning to look at identifying behaviors that are indicative of things like money laundering. And we're continuously updating that to better reflect evolving technologies and tools to understand. I mean, I'm talking a lot about criminals, but then it's like the global banking safety system. And we're focused a lot on that. So then banks feel safe to engage more, right, with fintechs like yourselves and others to begin to take up solutions that are on offer for customers across the board.
We started with a trial and error model. So we had a random sample to which this was a few years ago. We got exactly 4 years ago when we tested our first model. And the results were not very encouraging. So we had a large non-performing loan percentage. And over a period of time, we started collecting more data sources, started using more data sources, not just the transactional data that we had with us. We also partnered with other companies. We looked at alternate data. We tried different sources of data, different modeling techniques, revised the model multiple times. Today, the non-performing loan percentage is less than 3% for instant loans that we have. So that has been the biggest achievement.
Nice. And then having lower non-performing loans means that you can offer the loan more inclusive and accessibly wider with great scoring. You're able to offer the product wider then as well, right?
Exactly. So what that essentially means is that now you can go deeper into the files and then access more people who are desperately in need of credit, but were not being given before.
I would say we have very successful using AI for customer support. In AMK, we have a call center department, which before we introduced the AI tool for customer support, our staff had to answer a phone call. But now, based on our latest data, I think about 45% of the response now, I think come through chat and are responded by our bot. So I can say that in terms of customer experience and improve the service, I think we done very well. In terms of costing, I think it also helping a lot which means our person as a call center staff can focus on real issue, with customer, while product knowledge, product inquiry, simple, straightforward question can handle quickly by the bot, and it is 24/7. So which means people are free to do it. One interesting things which we found is that people also prefer to chat than call, particularly on inquiry on information, because I think it probably save them time, but also it doesn't cost money as much because they use data already. But also people are quite familiar with chat.
I think our biggest success is we have like an enhanced table of how we can really risk-based financial capacity assessment, right? Because of the limited data, we just have to do that. And again, these are like small loans, right? We can't like have like a big cash flow analysis because there's no data to begin with. So we have to rely on those other factors. Because this one is a bit kind of like back and forth, right? Like we look at the data, you adverse, and then you test it for a year. But I would think AI, machine learning, can do it more dynamically, right? It can reveal things that took us like a year to see, right?
We've been primarily focused on using data from an analytics point of view in credit assessments and segmentation. I think our biggest success or demonstrable and quantifiable success, because that's important too, for institutions has been the improved efficiencies that you see when you apply these tools and the resulting operational costs that come down, because that is important from an financial inclusion perspective. The cost coming down, I mean, one of the biggest costs for traditional microfinance is that loan officer, is that human touch that you require, and anything that you can do to bring down that cost ultimately will benefit not only the financial institutions but the clients in a very, very tangible way. The quality of lending, of course, using database assessments leads to portfolio qualities improving over a period of time. Again, we've seen that both with our traditional models as well as the ML-based models that we've used. So I would say that the success areas have been mostly around that, and in terms of highlighting of what's important to us is really the fact that wherever we've been able to demonstrate even a marginal decrease in the operational cost, I think that's going to have the impact on the clients really benefiting from it.
What are the biggest constraints that you see in integrating AI and ML into financial services in emerging markets? So we sort of thought about the successes. What are the biggest challenges that are there that you've come across?
At the time we started building the model, we had about 12 million unique phone numbers that used us every 12 months. Today, it's close to 15 million unique phone numbers that uses every 12 months. The country has more than 22 million mobile phone numbers. And there is the percentage of same network calling is very high in Cambodia, which essentially means people hold multiple phone numbers. So continuity of the data that we collect becomes a problem when your unique identifier is your mobile number. So people interchange different mobile numbers and then start using it for transactions on our network. So that was one deterrent, though we have a large amount of data that we collect by default of the operations that we have had. The continuity of the data and assigning it to a single individual was one of the biggest problems. So we had to overcome that by building surrogate models, lookalike models, building lookalikes of profiles of customers, looking for alternate data, partnering with others. So that's how we try to overcome that challenge. Three problems. One is obviously the data sources. Second is the knowledge. Now, if you want to, we have a project going on here for graph computing to understand if we can apply that onto the operations that we have, not only at the banking side, but also at the e-commerce side. But the knowledge, when we sit down to do that, when we realize that it is difficult to have the skill sets that's required for this locally here in Cambodia. So that's the second problem. And the third problem is the digital capability of the people. They still prefer to have a large chunk of the population still prefer to have a human interaction at the last mile. So we tried to solve that through our 11,000 strong agent network, and we whatever is digitally built is also made available at the POS terminals at the agents. So the customer who is not comfortable doing a digital transaction can come to the agent and then carry out that transaction. So it could be an AI-driven decision making that is happening at the back end, but the last mile fulfillment is done physically.
A number of people, a number of company, or a number of solutions we saw, the boat, to train the boat, you require quite a heavy IT skill to do it. There are very few in the world, I believe, to my knowledge, that they allow non-IT people to actually to be able to turn a boat more as like a workflow system where you can create your own workflow, your own questions, and so on. And to me, from experience, especially in organization like AMK, where we don't have 100 IT professional, we want actually more and more solution where it is simple enough, where our teams who are not an IT background, which has some good IT knowledge but not an IT professional, can actually do the job. And I can say that that is one of the challenge also which I see within the AI kind of solution, but it still requires quite a heavy IT person to train particular bots or to train particular interns to get it work.
There are constraints at two levels, right? First is just a lack of understanding of the technology itself and its positive powers, right? And within that is also the idea of responsible AI, which is actually a simple, beautiful thing if the ecosystem aligns. And yet, if you're at a distance, it can be very daunting. And I think especially when you go to regional players, emerging markets, smaller players in the banking system and FSPs, if you don't have an understanding of it, and if you don't understand today, increasingly it's becoming affordable and accessible, you're not engaging with it. So I think there's a lot to be done at that level to just demystify and bring it closer to the users and use cases to make them very real. Then of course there is like the regulatory environment and policy to make sure that it's in place in a responsible way. Like who is governing that? And I think there's a need to educate governments there and to build their capacity. Then in sort of a very real context, the conversation we're having. So for example, your own organization, right? Like how you've got some great solutions. How do we get FSPs and banks to see that? I think it becomes, it's a combination of the first two that I said, and the third is real resources and time to be able to have the internal infrastructure to make the space for piloting innovation, taking that to the end consumer in a good and understandable way, and then being able to scale that, right? I think there's a bunch of processes there that require resources, time, and leadership will. I think these really are the very big ingredients. And I'm sure you're seeing in your own experience, right? Like when you go and get them to understand, then they're very quick to engage. But to get to that point of understanding and to make it accessible is a Herculean effort even today, and even more so in emerging markets.
And the quality of data, that's something that we've struggled with, not even before AI came, and the availability of data, the quality of data, how it's the thought behind how data is stored, how it and how data from different sources is stored, so that you can integrate it in a way that it can be much more meaningful in your analysis and product design, has always been a challenge. And I mean, like I could not stress enough the quality of data. I think that in emerging markets, not only emerging markets, I think across the world, geographies where we see data availability and standardization happening faster or differently is, I think, where we expect to see success faster than other geographies.
You have to balance as well, like how much information can you really encode and capture versus turnaround time, right? If you were to encode everything, validate everything, correct everything, maybe the loan process will take so long, right? That's why maybe with maybe not so much AI, but some automation in how we collect data, capture, right? Because I always tell my people it's a trade-off, right? Yes, we want all this data. We let all the customers answer it. We have something encoded. But I've seen, at least, let's say in your onboarding platform, right? Like some of these things can actually be done more automatedly. So, that helps, right? So there's a trade-off of like customer experience and, hey, we actually captured a lot of data.
And then the fourth question that we had is, it usually doesn't always make sense for all financial institutions to develop tools around AI, ML in-house. And so there's a concept of banks or microfinance institutions collaborating with fintechs, nonprofits, regulatory bodies to collectively drive some AI financial inclusion. Do you have any examples of good activities that are happening there, or constraints that are happening there? Like what are the upsides and challenges of those collaborative efforts?
Most of these things we built ourselves. We have a large in-house team of developers and data analysts here. But at the same time, we also understand while technically it is possible to be the jack of all trades and the master of all trades. It's not always a viable solution when speed to market is critical. So you don't have to learn everything yourselves. So we partner with we have partnered and still partnering with a lot of similar organizations. So we started out with Lendo EFL in 2019. Then we had Synaptic AI, who was our analytics partner, while we were building an analytics team in-house. Now we work with Boost Capital. Boost helps us with reaching out to the factory workers. We do about 40% of the total payrolls for factory workers in Cambodia. And reaching out to these women who are predominantly predominantly falling prey to the loan sharks when they are desperately in need of money. We started giving them zero interest loans, and we partner with Boost Capital to help build financial capability or digital capability among these women who may have a smartphone, may have a Facebook account, but may not be comfortable using it for a digital loan. So we work with Boost Capital to address that issue.
The internal capacities need to address at least having the capacity to be able to engage with these partners that they're working with to provide the various services, to understand what is being provided and to ask the right questions, manage and monitor them. Because that, I think, is an important perspective. One of the things that I think, always has to be kept in mind that a lot of these institutions are regulated institutions. There are a lot of repercussions to being non-compliant with data privacy and the laws around that changing all the time. All of these become important factors in how you engage, who you engage, and how the data is moving across so that privacy is not being breached, etc. So I think that the internal capacities, while I don't think, and I truly don't think that it's an idea for every single expertise that's required in terms of new technology that's coming up for banks to build that internally. It just doesn't make sense. It's not their, core expertise area. So I think what I see more is the focus on having the internal capabilities to be able to manage these relationships and be able to identify the right partners that have that understand what your needs are and what your customers' needs are. So user acceptance and things like that need to be something that a lot of these technology partners need to understand better, and for these institutions to articulate and put on the table in much, much more robust ways so that they are more impactful when they're being used. So I think those are things that I think that we need to keep in mind, while engaging and outsourcing a lot of the activities that you want to be able to use these new technologies.
So number one, the challenge is I think banks sometimes we don't know what we're looking for as well, right? So we need to invest a lot of time talking to people. Oh, this technology is already available. Is it applicable to us? There's like a matching thing. But to begin with, sometimes we also don't know what we're really looking for, right? Second is like it comes in piecemeal. Like, okay, this one can solve this part, this one can solve this part, and it takes a lot of time. So these are the challenges, right? But I think it's really keeping up to date to what's available.
I'm very big fans of outsourcing collaborations with third party fintechs, NGOs or other non-governments or even government institutions, and I have a very strong belief that everyone have your own strength and your own expertise, and no one can be expert in everything. We as financial institution, our core business is actually provide financial service and manage the risk. When we use technology to provide better delivery services to our customers, and therefore our core strength is not technology side. Our core strength is our core business, and therefore we would be very happy to working with fintechs or other organization to do that, and we can join collaborations as well. We do have experience where we do a collaboration on projects where we can source our technical teams working with other fintech technical team to actually come up with a product. Sometimes not just an IT solution, but sometimes we sourcing our own financial knowledge to a fintech company, so that fintech company can build the tools, the right process for financial institution to use, because the fintech company may not necessarily understand financial products and financial process, and doesn't understand our customer base. That we have that, but we may not understand technology. So I think that is complement. We see it as a complement, not a competition.
So wrapping up what we've learned in the panel today, the most common successful applications of AI and ML so far seem to be in data analysis to unlock new financial products and underwriting. The biggest constraints seem to be around data continuity and quality. Banks see knowledge constraints within their own bank and by customers as blockers for integration of AI. So I think we as an industry need to demystify AI use cases for banks and make it accessible. Banks want options that can be customized to them, and off-the-shelf products don't always produce the results that banks are looking for, or requires piecing together multiple offerings. But as a starting point for even non-tech savvy institutions, once banks have implemented rules-based lending, you set the groundwork for automation, and from there, AI integration. At Boost, we ingest a bank's financial products and processes to onboard bank clients according to their rules. These rules are the starting point of automation and an AI integration. And in the case of Boost, that's automation of onboarding using chat. Success cases, banks definitely see efficiency gains from AI, ML, and natural language processing that brings down costs, reduces risks, and to the benefit of clients and financial inclusion. Thanks so much for joining the panel today. We've enjoyed having this session, and thanks to the sponsors as well.